Good morning, everybody. We've got a mostly higher trade in the grain markets here on Wednesday morning. It is 6:30 a.m. Central Time. December corn futures up 0.75 cents at 571 3/4. January soybeans up 7 3/4 at 12.59. December Chicago wheat up 3 at 8.13 1/4. December Kansas City wheat up 2 3/4 at 8.23 1/2. December spring wheat up 2 1/4 at 10.17 1/4. If you guys are watching on YouTube, I'm dealing with some different camera gear here this morning. I'm moving offices this weekend, so don't mind the change. If you're listening on the podcast, make sure you leave me a rating or a review. Like, subscribe, share, all this stuff, guys. Help me to grow this thing. If you need some additional assistance from me, go to my website. It is www.standardgrain.com. Go to that website, click on Grain Marketing Plan in the upper right-hand corner for $49.99 a month. I've got a subscription service. Most of my subscribers are farmers who are seeking additional help with their grain marketing, additional understanding of how these markets work. Check this deal out, guys. $49.99 a month. You can cancel it at any time. There's no other fee. There's no other obligation. I won't try to sell you anything else. You get my morning email, text messages. My subscriber-only videos are very popular. I break down a lot of different things when it comes to marketing, markets, all that stuff. Check this out. We have some additional acreage estimates for next year emerging, and this is an incredibly interesting situation. This is going to be one of the most interesting acreage battles, if you want to call it that we've ever seen, in my opinion, the way that it's shaping up. So the estimate we saw yesterday was from IHS Markit. That's previously Informa. They are very well followed. They pegged 2022 U.S. corn acreage at 90.784 million, down 1.6 million from their estimate from just last month. That would represent a decrease of 2.5 million acres from last year. We planted 93.3 million acres of corn in the United States this past year. They're talking 90.8 ballpark now. The group pegged 2022 U.S. soybean acreage at 87.9, which would be only up about 700,000. They're looking for a big increase in wheat acreage. All wheat acreage pegged at 49.37. which would be up sharply from 46.7 this year. So this group talking big corn acreage decline, big wheat acreage increase, and only a marginal increase in soybean acres. Of course, we know we've got a lot of moving parts here. This fertilizer situation, as it relates to corn in particular, is one of the big driving factors. A lot of people believe that the fertilizer just is too expensive. It won't be available. The logistical constraints will continue into next year, and that factor will ultimately result in a big loss of corn acreage. So a lot of people believe that, and I don't know if that's true or not, because corn does pencil really well if you can get your hands on the inputs, and that's a big question, and it varies drastically from location to location. The other issue for me would be some of these other crops. Like, look at crops like oats, some of these small grains, things that could pull acres in, say, the northern plains in particular. Do we see a lot more of that? And what we've seen here the last several years is a general trend lower in principal crop acres in this country. So just the amount, the acreage pie that can be split up is smaller than it used to be. Do we see some acres come back this year? I don't know. Next year, but it's really an interesting deal, because it's like you've got this smaller acreage pie, you've got all these crops that need acres. Corn can't really afford, in terms of the balance sheets, to lose 2 or 3 million acres, according to most estimates, and we haven't really started, or I haven't at least started much in regard to balance sheet work for next year. But extremely interesting, guys. USDA reported some additional flash sales yesterday, 161,000 metric tons of soybeans to an unknown. That's about 6 million bushels. It's probably China. 270,000, that's 11 million bushels of corn to Mexico, also confirmed. So far this week, we've seen flash sales of corn and soybeans on both Monday and Tuesday, a total of about 16 million bushels of soybeans, a total of about 18 million bushels of corn. Perhaps some of these soybean sales are, in fact, the Chinese buying that was rumored on Friday last week. And if that's the case, we may see more, because I think the talk was like double the amount we've seen so far this week. So be prepared potentially for some additional flash sales. Canadian wheat acreage likely to rise next year. This is no big surprise. Initial projections from an ag ministry official suggest an overall wheat acreage increase in Canada of about 6%. High prices the driving factor. Obviously, they had a big time crop failure in Canada in regard to wheat last year. Canada is the world's, I believe, 7th largest wheat grower, but they export in Canada like a good 75% of their production in a normal year. So they're a big exporter. And this, of course, is going to have implications. We think we're going to see increased wheat acreage in the U.S. We're not thinking increased wheat acreage in Canada, probably in other countries as well. These prices make money. Nothing spurs additional acreage like high prices. So that's another thing to consider. Ethanol plants continue to push interior corn basis bids. So ethanol prices are trading like record high levels, or pretty darn close to it. And despite the fact that cash corn is, in the upper fives, these ethanol plants are still able to make a lot of money. And you're going to see a really strong ethanol production number again later this morning, I would imagine. So a lot of the strength that you've seen in the market, both the corn market, just futures, and the basis market, the cash market, a lot of it has to do with ethanol. And they want to lock up needs, through December, through January, maybe beyond that. I'm not sure. But that's a big part of the reason for the strength in the corn market and the strength in the ethanol market, of course. The U.S. dollar posted some fresh highs overnight, highest trade since July of 2020. And the dollar is strong, of course, versus a basket of other global currencies. I mean, versus the euro, versus the yen, the British pound, stuff like that. The general idea here is that the Fed is going to get into some tighter stuff when it comes to policy. We already know that they're going to start tapering asset purchases this week. General talk in regard to interest rates is that you're going to see your first rate hike from the Fed probably in mid to late 2022. And we're not talking big rate hikes here. We're talking like they're going to go from 0 to a 0.5 percentage point for the Fed fund rate. And then by 2023, you might be up to 1 or 1.5%. Beyond that, 2024, you could be up above 2%. That's kind of the general projection right now. And the currency markets, guys, these are just markets of relativity. So if the dollar and our monetary policy is tight relative to Europe in particular, that's dollar positive. And the European Central Bank, I believe, was just out recently saying that they have no interest in raising rates at all. So you take that combined with the prospect for tighter policy here in the U.S., and you've got yourself a stronger dollar. And a stronger dollar, of course, typically is negative, the commodity markets, but we haven't really seen a whole lot of that. Remember, we've got ethanol production today, export sales tomorrow. Cattle market was mixed yesterday. Both sides have unchanged. We had some gains in the deferred feeder cattle contracts. Ahead of the cash open, the U.S. dollar just marginally lower here, but has been very strong again. The stock market is mixed, very quiet. Bonds down a little bit. Gold's up $11. Silver up a little bit. Crude oil is down 46 cents in the January WTI at 79.28. Everybody have a nice day today. I'll talk to you guys same time tomorrow.